Hello, everyone, and welcome to another installment of our Southern California housing market update. My name is Stephen Meade with Domicile Real Estate, where we have real estate for people who love houses, which hopefully is you if you are watching our market update. This is for Southern California, Los Angeles, and Orange counties is where we take our stats from. And I want to talk a little bit about what the market is like right now. And when I mean right now, I mean literally the week before Christmas, or kind of in that period of December. And I actually think it's probably one of the most wonderful times, not just for buyers, but also for sellers. And the reason is this, when we are in a market, say April or June, you put a house on the market and you get 20 offers on it. And that sounds like great news for sellers. It's not always great news for sellers though. And the reason being is of those 20 offers, probably at least 10 of them are not entirely serious. So one of the things you have to do when you're a seller is look through and try to figure out who is a serious buyer and who isn't. But this time of year, if someone is in the marketplace right now, meaning either they have a home for sale or they are buying a house and writing offers, they are a serious buyer and seller. So it kind of, pardon the phrase, cuts a lot of the crap in the marketplace. So this is actually what I think is one of the most wonderful times to be a buyer and a seller, is kind of in this period before, towards the end of the year like this. Now, a little bit of less than positive news for our buyers. We're going to talk about our market stats, and we're not really seeing drastic changes. I think some of us were hoping, right, that what we would see would be a reversal of some of the trends. But let's go back. So first off, let's talk about inventory and where inventory is. If you watch our first time buyer market update, one of the things that we talk about is that we are quite a bit worse off at the end of this year than we were at the beginning of the year in terms of inventory, right? Right around that Christmas, New Year's timeframe, look at where we were for our under $1 million inventory. We were at about 5,000 houses. Look at where we are today. We are under 4,000 houses, right? So 20 to 25% off. If you look at our $1 to $2 million category, we were probably at around 2,500 houses. Today, where are we? Under 2,000 homes are active and on the market. So what we're doing is we're really setting ourselves up for a spring that's going to be a bit tricky for buyers. So I do think these inventory numbers will improve. Unfortunately, I don't know how much they're going to improve, and we're already starting off kind of at a real deficit versus where we started off this year. And we all know how this spring turned out. Believe it or not, these numbers are not quite as scary as they look. I was talking with a colleague of mine in the Bay Area, and versus last year, they are actually looking more like they are 30 and 40% off of their inventory numbers the same time last year, which is pretty crazy to think about. So there are actually other markets that are even more impacted than Southern California. Now, if we move on for our inventory, let's look at what about the flow of new listings coming on the market. Again, you can really see how these numbers have taken a dive. Look at where we were though a year ago. Again, in the 2 weeks prior to 12/21/2020, 2,500 homes came onto the market. Now, again, under 2,000. So not only is our inventory level low, but our supply rate of new homes coming into the market. We do see in that 1 to 2 million category a little bit of an improvement in that. One of the things that might be happening too is as prices go up, this under 1 million and 1 to 2 million sort of statistic, that might actually be kind of changing the market a little bit. So it's possible that there's a little bit of skewing from that, but I don't think there's any question to me that the supply of homes is down versus where we were last year. I mean, these changes are just too big to account for those differences. Now, if this is our supply side of the equation, what's happening with demand? Well, something interesting happened with demand. It dropped, but it's not dropping any further. It kind of hit this lower plateau. And, when I look at that on the chart, what gives me pause about that is it means that we are not in some transitory situation where demand is outstripping supply. This is starting to look more like a chronic issue, right? This isn't just because of the end of the year. If we look and reconcile that with an absorption rate, look at what's happened. We are consistently seeing these absorption rates into the 90s and over 110%. This sort of yo-yoing effect that you see here, some of this is holiday induced, meaning we have Thanksgiving holiday and some other things, but not all of it. The fact is we are burning through homes considerably faster than we're adding to the market. Now, the good news is, if you look, that was a little bit of an effect that we had last year as well, because what happens is nobody wants to put their home in the market right now, but buyers are still out there, right? We know this. We know that's how buyers behave in the marketplace. Moving on to our prices, right? One of the things that we're thinking of doing for 2022 is having both a long-term price outlook back and then a shorter term price, because I think it's a little harder to see the trends sometimes, because one of the things we've done is this looks pretty flat. We really need to zoom in on this last bit of time to see kind of where we are. So we might be doing that in 2022 and adding an additional chart here. But my gut feeling is that these prices have nowhere to go but up. Even if you look here in this median, where were we in November? Where are we now? They are more expensive. Prices have indeed gone up. So like I said, again, we might be breaking these down into something easier to digest, to kind of look at the last 90 days of prices, right? Because in a fast moving market, I think we need to have a little bit more of a zoomed in view on that. This is a secondary measure of market competitiveness. And what we do is we look at everything that came in the market in the last 14 days and how much of it is still around. Lower means more competitive. You saw we had a springtime. We got over this point in March is when the market was most competitive. Then as we went through the summer, it got a little less competitive. We all saw this, but look what's happened in the fall. It's gotten more competitive again. That's a little surprising, not given the other data, but that's not typical for us. Normally, our market gets softer towards the end of the year, and sometimes there are even deals to be had. This year doesn't really feel like that to me. That's not what we're seeing actually out in the field. And then kind of to just bolster this a little bit is this close to list ratio, right? We saw as we went in the spring, look at where we are versus last year. Last year, homes were trending generally right between 100 and 101% of list price. They even dropped a little bit below in that 1 to 2 million category. Look at where we are now towards the end of the year, right? Where we are now is that we are firmly above 102% of list price. This may not seem like a big deal to you. You think, what's 1% of price? But remember, these are averages. That means on average, every home is still underpriced by an additional percentage point, or on a median priced home, that's like $7,500. That's not an insignificant change. Then we take a look at our days on market, and you do see this number creeping up a little bit. I think that's encouraging, right? To see this number going up. This is good news for buyers. But let's reference it back to where were we a year ago today? A year ago today, we were at almost 40 days for our under 1 million category and 55 days. Look at where we are now. We are under 30 days, and we are just over 30 days in our 1 to 2 million. This is not a normal market, right? This is typically our market gets significantly softer towards the end of the year and then tightens up in the spring. That's not what's happening this year. Finally, we're taking a look at our affordability. That has gone up a little bit again. And by going up, I mean the prices have gone up. Remember, this chart is charting what is the payment on a median priced home relative to June of 2018. Back here, our kind of baseline 100%. And today we're probably around 118% of that June 2018 number. Now it has been 3.5 years to go up 18%. I don't think that that's unreasonable to see that happen. But as we see this edge up a little bit, remember, we spent most of the summer kind of more in this 12 or 13% range. And then we started creeping up again, not nearly as fast as we crept up the spring. The spring was crazy, as you all well know, but it is definitely heading upward in an upward slope. And I think we're seeing that upward pressure on price for a couple reasons. Number one, we have inflation, right? Inflation is present. And the funny thing about inflation is hopefully wages follow that, and that allows clients to essentially spend more money. So the real increase in housing costs may not look like this. The second reason is we are perennially short on supply. And it's pretty much economics 101. If you've got 3 people who want to buy houses and you only have 2 houses available, eventually someone is going to bid those prices up so that third person drops away and says, too expensive, I don't want to buy a house anymore. That's how we reconcile supply and demand. I think we're going to see that. We're also seeing that condo market is starting to move up a little bit as well. I think the condo market was really depressed in the wake of COVID, but it's definitely heading up on its own. Anyhow, thank you guys for watching. Happy Tuesday. I know we have the holidays coming up. Exciting time. We're kind of working on a top 5 list for us to kind of recap the year. So we might go over that for our next update, which will be our whole market update, will be on the 28th of December. But stay safe out there. People are driving crazy. And also, remember, this is housing. It's not life or death, hopefully, for you. And, it pays to really kind of maybe take a step back when you look at these things and make rational decisions. Speaking of which, if you're looking to buy or sell property in Southern California, in LA, Orange County, absolutely hit us up. There is a link in there for a free 15-minute, no cost, no obligation consultation. If you just want to chat with us, we can do that too. And don't forget to like, subscribe, hit that notification bell, and we will see you later this week.